Hello everyone, welcome to Trade Breakdown on EU. We're gonna start off with a daily chart to do two things here. First of all, to determine our drawn liquidity, our higher time frame drawn liquidity, and then to determine our daily buys for the day, right? These are the two things that we're gonna do on the daily time frame, and we're gonna make sure that we do it accurately and precisely with the things that we already know, right? Now, once we've accurately determined those two things, we're going to move down to the 4-hour time frame, and then there we're going to find a CRT, a hyperability CRT, to position ourselves towards the higher time frame drawn liquidity and potentially trade it, right? That's going to be our objective as a trader, as intraday traders. So first of all, right here, you can see that we had this bullish dealing range, right? I've been talking about this daily range since past few breakdowns, right? Now we know that our drawn liquidity is higher, which is this range highlight here, right? So you can see I've determined this high to be the long-term drawn liquidity based on range dynamics and based on advanced market structure, right? This weekend chapter is going to be all about range trading and its dynamics and turtle soup and how you're going to be using all of them in conjunction with each other to trade the charts accurately and determine higher time frame drawn liquidity and biases, right? So right here you can see that we've got this bullish dealing range, and here you can see that we've got this discount key level in the form of this fair value gap, right? Now we know that this is a bullish dealing range, and before price could move higher toward the higher time frame long-term joint liquidity, first of all, it will retrace to a discount key level to rebalance this whole range, and then it will test a discount key level and then expand higher from there. And that is exactly what happened here. You can see that we've got this discount FEG, price retraced back to this FEG, this fair value gap, and then it reacted from there explosively towards the higher time frame drawn liquidity. Now, what happened on Friday is that we had this explosive expanding candle, right? And you can see that the drawn liquidity is still higher and the objective hasn't been met, uh, right? So based on that, we're going to expect Monday to continue expanding higher to do what? To reach that drawn liquidity and test the key level. But obviously, first I had to merge it with a 4-hour CRT trade, right? CRT there, and then actually trade it on the lower time frame, right? So now you can see on the daily time frame, I've determined my drawn liquidity, which is that range high there, and my buys for the day, which is also bullish, which is towards the upside or higher. So we've done our two things on the daily time frame. Now I'm gonna go down to the 4-hour time frame and look for a CRT purge there at a key time and trade that on the 15-minute time frame based on time frame alignment, right? We can also combine intraday profiles there and intraday buy sessions there as well, right? So let's go down to the 4-hour time frame and let's see what we got there. Right here you can see that we had this expansion right here, right? And then today we had this price action on the 4-hour. Now, as we determined on the daily that our drawn liquidity is higher, right? And it hasn't yet been met. So what we're gonna do, we're gonna wait for a purge here on either of these 4-hour candles and then trade it on the lower time frames, right? Now, the premise of CRT is that every single candle can be treated as a range, right? You can take any candle as a CRT, but then there are high probability CRT and low probability CRT, and then there are different protocols uh, for how you can choose a correct CRT, a high probability CRT that will work, right? And that also depends upon the framework that you are working with and depends upon the higher time frame down liquidity and what price has done in the past few days or few weeks, right? That also depends upon those factors, but also whether there's a key level below the CRT or above the CRT, or whether at which time the purge has occurred, right? Or if there's an inside bar to these CRTs, inside these CRTs, and then it also depends upon the intraday profiles, like what sort of intraday profile do we have on the intraday 15-minute charts, right? So we're gonna combine and integrate all of these factors together, and then based on that, we're gonna decide whether we will trade this CRT or not, right? But the premise is that on the higher time frame, you can trade any single candle, right? You can take any single candle and you can treat it as a CRT and trade it on the lower time frame. But obviously, not all of them will work because first of all, you have filters, you have certain factors which you'll use to filter out or weed out the lower probability CRTs, and then at the end you'll only end up with the ones that will work accurately and precisely, right? So that's how you're gonna go about these CRTs. So right here you can see that what happened is that price took out the low of this candle, and not only that, it also took out this low candle as well, and it purged it during the London Open zone, which is from 2 a.m. to 5 a.m., right? So now I'm going to take this candle and I'm going to regard it as a CRT because price purged at a key time, right? And we've combined it with an intraday profile, which is the intraday normal protraction profile, right? And you can also see that we've almost reached the drawn liquidity, the opposing end of the range, right? So that means we are in the last phase of the sequence, right? The TSQ, which is the kiss of death sequence, right? And which is basically the last phase, the last counter liquidity purge before the return liquidity is reached. So based on three factors, because we are in the last phase of the sequence, right? We can match it with an intraday normal protraction profile, and then uh, it also has that time factor to it. We purged it during the London Open zone, which is a key time for manipulation profile to occur, or a key time for intraday normal protraction profile to occur, right? So based on these factors combined, I'm going to take this candle as a CRT and I'm going to trade it on the lower time frame, right? So right here you can see that as soon as this low was purged, I went down to the 15-minute time frame and looked for an entry there, right? So now let's go down to the 4-hour time frame and let's see what we've got there. So on the 15-minute right here, first of all, I'm gonna plot out the opening and closing times, right? So we can see that where we are inside the daily range, right? So right here you can see that as soon as the candle opened, the daily candle opened, we straight away went into a ranging profile, right? During the CBDR and the Asian session, we formed this ranging profile. And then after that, we went into this manipulation profile right here, right? And during this manipulation profile, first of all, we took out the range high and then we manipulated below these lows and had a purge there. And all of this was a manipulation profile, right? Now, if you look at the timing of this purge right here below this low, then you'd see that this purge happened at a key time, which is during the London kill zone at 2 a.m. Eastern time, right? Which makes it a high probability purge, right? And combining it with all the other high time frame thought process that we've done just before, when we combine it with all of that, then this purge during this particular time becomes even more high probability because everything is coming together, right? That's how you're gonna know when you're finding or generating or trying to look for a trade idea and you're trying to see what the market is telling you, and you do all of your higher time frame analysis and you do it in this top down approach where you are refining and bringing down all of the higher time frame thought process down to the lower time frames, then you'd see that it follows a logical framework. And as you keep integrating these concepts and trying to look at it with a refined perspective, you'll see that everything is trying to make sense, right? You would see that everything is in sync with each other, everything is aligned with each other, and there's nothing that what do you say? And there's nothing that actually takes it off, right? So you're gonna see that once you do all of these things, the trade idea that you've generated or that you've formed based on these concepts that I've explained to you in CPI, you would see that it actually makes a lot of sense. That's why it makes it a high probability trade idea. And then you're going to trade it based on your entry model or your entry setup, whatever that is, right? So, along with all of that, right here you can see that we are also in an intraday null protraction profile because we purged below these lows and we had a manipulation profile, right? So Asian session in the CBDR was a ranging profile. Then during London Open we had a manipulation profile, right? So now you can see that based on this framework we are in an intraday normal protection profile, right? So the next thing that we're going to anticipate here, and the only possible outcome for price after all of this has happened, is an expansion higher. So we purge below CR2 at a key time, non-liquidity is higher, we have a normal protection profile, right? So we have all of these factors which are pointing towards the bullish side, right? And that means we can expand higher. But obviously I couldn't just take an entry right away here, right? What I did is I waited for my entry setup to form in the form of a model 1 entry, and then as soon as we had this CSD and we formed this order block right here on the 15-minute, I took my entry there with a market order, right, as soon as price tested it, and then my stop loss was below this low right here, and I targeted the opposing end of the CRT or the higher time frame liquidity, right? This was the trade breakdown on EU.